Hey everyone, welcome back to Corporate Decoder, the place where we unpack the secrets hidden in plain sight within corporate filings. And today we're diving into Immix Biopharma's latest quarterly report. And let's just say things are getting interesting, especially if you like to see how companies are trying to keep the lights on when the going gets tough. Make sure you are subscribed and also join our Discord community, linked in the description below for more in-depth discussions. This is Immix Biopharma's quarterly report, essentially a check-in on their financial health and business activities for the period ending the 30th of September 2025. It tells us what has been happening since their last update and gives us a peek into what they're planning and what could go wrong. Let's start with a look at their balance sheet. This gives us a snapshot of what the company owns and owes at a specific point in time. On the 30th of September 2025, their total assets were about $20 million. Now, that might sound like a lot, but it is actually down from the 31st of December 2024 position when they had a bit over $22 million in assets. On the other side of the coin, their liabilities, what they owe, went up from about $9.6 million at the end of last year to over $11.8 million by the end of September. So their debts increased while their total assets decreased, which is not ideal. This difference between assets and liabilities is called stockholders' equity, and it is essentially what belongs to the owners, the shareholders. And here is a number that really stands out. Stockholders' equity has shrunk significantly from over $13 million at the end of 2024 down to about $8.2 million by the end of September 2025. When equity decreases like this, it usually means the company is losing value. Now let's look at how they've been performing in terms of making money and spending it. For the 3 months ending the 30th of September 2025, their loss from operations was about $7.6 million. That is pretty similar to the same period in 2024, where they also lost around $7.3 million. Looking at the longer 9-month period, the losses are even bigger. For the first 9 months of 2025, they had operating losses of nearly $19.1 million compared to about $17.7 million in the same period of 2024. They are losing more this year. And when you zoom in on what is left for the common stockholders after everything else is paid, the net loss for the 9 months of 2025 was around $18.7 million, an increase from the nearly $16.8 million loss in 2024. This shows they are consistently losing significant amounts of money. Looking at the sheer number of shares issued, you can see they have been quite active in selling more stock. Between the end of 2024 and the 30th of September 2025, the number of issued shares went up by over 5.4 million. This is how companies like this often raise cash to fund their operations when they are not yet profitable. They are essentially selling pieces of the company to investors. They've been actively using something called ATM facilities to sell shares. This means they can sell stock on the open market over time. For example, in the first 9 months of 2025, they sold over 1 million shares this way, bringing in nearly $2.6 million in net proceeds. They also had a significant private placement in September 2025, selling almost 4 million shares along with warrants, which brought in another $9.3 million gross. Raising cash is crucial for a company like Immix Biopharma, which is in the development stage and burning through cash on research and development. This section is super important. They explicitly state their cash and cash equivalents were about $15.9 million as of the 30th of September 2025. But here is the kicker. They believe this cash is not enough to sustain their planned operations for the next 12 months. They are planning to raise more money through various means, but there is no guarantee they will succeed or that it will be on favorable terms. This brings up what is known as substantial doubt about their ability to continue as a going concern. In simpler terms, there is a real question about whether the company can stay in business for much longer without a significant injection of cash or some major business improvement. They also have lease obligations. For instance, their current operating lease liability was over $141,000 by the 30th of September 2025, and their long-term lease liability was close to $1 million. This tells us they are renting significant space, likely for their labs and offices. And these are ongoing financial commitments. With all the stock options and awards mentioned, stock-based compensation is a notable expense. For the 9 months ended the 30th of September 2025, they recognized over $1.8 million in stock-based compensation. This is essentially the cost of giving employees and executives equity in the company as part of their pay. It is a non-cash expense, but it does affect the overall financial picture and dilutes existing shareholders. The bulk of their spending goes into research and development. For the 9 months that ended the 30th of September 2025, They spent over $10.5 million on R&D compared to almost $9.9 million in the same period of 2024. This increase is mainly driven by their ongoing clinical trials, especially for their lead CAR T candidate, NXC-201. This increased spending on R&D along with higher general and administrative expenses also contributed to their larger net loss for the 9-month period. They are spending more money overall as they push their products through development. Their main hope seems to be NXC-201, a cell therapy they are testing in clinical trials for amyloidosis. They've received some positive designations for this, like Regenerative Medicine Advanced Therapy, or RMAT, designation from the FDA. This is a big deal because it can potentially speed up the review process for new drugs. Their stated mission is to bring cell therapies to patients with serious diseases like amyloidosis, and they emphasize that patients are waiting. This highlights the urgent need for new treatments, but also the high stakes and long road ahead for a company like this. And this is pretty significant information. As of late 2025, there are no FDA-approved drugs specifically for the type of amyloidosis they are targeting. This creates both a huge opportunity if their drug works and a massive risk if it doesn't pan out. Competition is fierce in this space and the regulatory hurdles are immense. They've received both RMAT and Orphan Drug Designation, or OD, from the FDA and the European Commission for NXC-201 in amyloidosis. Orphan drug status offers market exclusivity for a period once the drug is approved, which is a valuable incentive. And for those of you who want to dig even deeper into the numbers, our Discord community is the place to be. We are always discussing these types of filings and sharing insights on how to interpret them. You can find the link in the description below. Now, for a bit of a red flag, the company acknowledges a material weakness in their internal controls over financial reporting. Basically, they are saying that their systems for keeping their financial records accurate and secure are not as strong as they should be. This is often due to their small size and limited staff, leading to a lack of adequate segregation of duties. While they are working to fix this, it is something investors should definitely keep an eye on. It means there is a higher possibility of errors in their financial reporting. This is arguably the most critical point in this entire report. They explicitly state there is substantial doubt about our ability to continue as a going concern within 1 year after the date that these consolidated financial statements are issued. This is a direct warning that without significant new funding, the company might not be able to stay in business. This is a massive risk factor for any investor. They also mention significant penalties they might have to pay if they don't get a registration statement for their private placement shares declared effective in a timely manner. This shows some of the complications that come with raising capital through these complex financial maneuvers. And here is something that directly impacts shareholder value. With so many options and warrants outstanding, they warn that the potential for issuing many new shares could adversely affect the trading price of our common stock and dilute the ownership interest of our existing stockholders. Essentially, if they issue a lot more stock, the value of each existing share can go down. So, what is my take on Immix Biopharma? On the one hand, they are pursuing a critical unmet need in amyloidosis with a promising CAR, T-therapy NXC-201, evidenced by some encouraging clinical data and designations like RMAT and OD. This presents a significant opportunity if their drug proves successful. However, the financial picture is concerning. They are consistently losing money, their equity has decreased significantly, and they themselves acknowledge that they might not be able to continue operating as a going concern without more funding. The material weakness in internal controls is also a point of caution. They are heavily reliant on future financing, and the market price of their stock is vulnerable to dilution. The company is in a high-risk, high-reward phase, and investors need to be aware of the significant downside potential. Even with the promising scientific aspects, their success hinges on their ability to raise substantial capital and, crucially, demonstrate the efficacy and safety of NXC-201 in large-scale trials. Alright, that is our breakdown of Immix Biopharma's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.